All right, and so I'm gonna jump right into it. So introductions. Who wants to? You want to start? I did. Quick, towards who you are, what fund, but sure. It's a 1 minute type thing.
Yeah, so hey guys, I'm a partner at Foundation Capital, predominantly early stage venture capital firm, lead Series A rounds, take board seats, build companies with technical founders, predominantly investing in, first order enterprise problems.
Hi everyone, my name is Jake Flomenberg. I'm a partner at Accel. We're a global venture capital firm, do both consumer and enterprise. I worked at Splunk and Cloudera and focus a lot on enterprise. I love that you call this data-driven, because I like to tell the entrepreneurs I meet, in the future there's going to be two types of software, data-driven software and shitty software, and I prefer strictly to invest in the data-driven type.
My name is Mike Dauber. We invest in shitty software. No, I'm kidding. I co-run a smaller fund in the Bay Area called Amplify. We're on our second fund. Thanks as always, Matt, for having us here. Worked with all these guys before. My partner and I were at Data Driven Ventures, which is a global fund for a long time, and we decided to focus on early stage, enterprise-y type software, and data analytics is something we spend a lot of time with.
Hi guys, I'm Chung. I'm with AME Cloud Ventures. It's an early stage venture fund out in Palo Alto. Unique for being a single LP fund. So we're founded in 2013 by Jerry Yang, co-founder of Yahoo. Largely a data-driven fund, although we do invest in either we call it frontier tech or deep tech. So we have a couple of outliers in that space as well.
All right, great, thank you. So we're gonna talk about big data, we're gonna talk about AI, but like taking things sequentially, what do you, and at a very high level, what do you find interesting about big data as a trend? Where are we in the cycle? What has been done? What needs to be done? Whoever wants to jump in first.
Sure, so I think we're hopefully in a little bit of a period of consolidation. I think we've seen the proliferation of a whole bunch of data management systems, a whole bunch of ways to deliver data, a whole bunch of ways to prepare data, a whole bunch of ways to do BI on data at these new scales with these different properties, and certainly there's room for others, but I think that ecosystem is starting to mature, and as we look at all these companies, in order for some of them to aspire to be the next Oracle, the next deca billion-dollar company in the enterprise space, what we need is the apps on top, right? It was a lot simpler back in the day when everyone agreed, everyone just speak this ANSI SQL thing, and you can do great stuff on top. Now we have 80 different ways to communicate, so it's gotten a lot harder in some sense, but the opportunity for teams of people that have deep domain expertise and know how to use this modern data infrastructure, I think is really interesting. And if there can be a couple winners at each layers of the stack that we just described, there's room for 100 winners across every different facet of application-facing enterprise software.
I totally agree with that, but I would also stress just how incredibly hard it is to find that lightning in a bottle. If you were to draw your Venn diagrams, if people know markets, they're somewhere over here, and people know the technology are somewhere over by that exit sign, and they very, very rarely run into each other. And so the number of companies you meet that truly understand the verticals that they're trying to disrupt is very, very small, but I would totally agree with you.
So my point of view has always been, the market is, from an adoption standpoint, is still very early. I think the entrepreneurs in this market have gone ahead and built all kinds of stuff that may or may not be ready to be absorbed by the market. I think what's happening is, I always believe early in the market, customers want solutions, not individual pieces. And the companies that we're seeing that are finding their way into the enterprise customer base today are the ones that are full stack solutions that actually have an existing problem, an existing market that is solving with a new way. And then, behind that comes the whole stack.
I say when we started back in 2013, a lot of it was B2B enterprise infrastructure type companies. And that has slowly transitioned, maybe not slowly, but into more, as I think Jake mentioned, full stack application type solutions. And I think a lot of that is accelerated by just the proliferation of open source technologies and people getting more familiar with developer tools and being able to actually crunch data and do machine learning type things.
Okay, great. So that's the high level. So within the big data world, so specifically, what do you find interesting these days? Maybe, what have you invested in recently? So we talked about applications, but within applications, are those industry-specific applications? Are they sort of enterprise application for sales or HR? Or just give us some specifics.
One interesting company that we've invested along with Accel is a company that is doing, so the thesis that foundation that we have is for every system of record in the enterprise, be it ERP, be it CRM, be it your CMDB, be it your HR system, there's a net new analytics application and a so-called big data company that needs to get built. And we've invested in a company that does very nice theoretical simulations on top of ERP systems, takes the data in real time, streams it up, does all the simulations, figures out what, and out of the 40 or 50,000 simulations to do at this in simultaneously, they figure out what operational changes drive the biggest financial impact for manufacturers of physical goods. And then they stack rank those by your ability to execute, and then they sort that across the enterprise. So it's true simulation-based outcome analysis as opposed to just correlating the past into the future. And I think that's a new way of doing things. I think more and more people will start seeing combining big data with domain-specific knowledge to do actual simulations to predict the future.
Great. Jake?
Sure. So one of the things we think about when we talk about advanced analytics is what is the basis of competition? Do you think you're going to have a fundamental algorithmic advantage in perpetuity or not? And in the vast majority of cases, the answer is almost demonstrably no. And so what does that mean? What is the basis of competition? And the thing that I always start the conversation with for any enterprise workflow tool is what's the data you're collecting? Is the data itself going to be an actual barrier to entry? Is the data that you collect along the way, and then perhaps the supervised learning you do on top of that, going to be that competitive moat that no amount of dollars or human intellectual capital could ever allow you to catch up? And so one of the young companies I work with in the security analytics space helps to develop that first repository of what do human security professionals do day in, day out. And by collecting, to collect all that data, they have to do a lot of things. They have to integrate with a lot of tools. They have to offer various forms of communication. But they pull together this really unique data asset of what are these people doing day in and day out. And that's not massive petabytes of data where we have to find some needle in the haystack to make an intelligent guess. That's reasonably small data. So people can sort of crawl, walk, and run their way into advanced analytics. And for enterprise workflow software, I think that's an often overlooked opportunity. So if you're building that, I'd encourage you to, if you have the word AI or ML in your pitch, which you probably all do, take it out and see if that pitch still resonates, because you still have to, get started somewhere and then layer some of these more advanced analytics in over time.
But if you take it out, it's not as sexy.
That's true.
So I think on this notion of, we've talked about first mover advantage in businesses for, I don't know, as long as I've been alive. What we're seeing now in some of our earlier data-driven business companies that are earlier on in our first fund, when they get it right, they create moats around their business that are very, very, very hard to beat. So I agree with what Jake was saying around that data lead, and we spent a lot of time thinking about that. But if I'm really intellectually honest with this audience, I think the thing we look for most in this space right now are just killer technical teams. I think technical talent is so difficult to find, and it's not distributed even remotely evenly, that it clusters in very, very, very tight places. And if you can find a cluster of these teams where you can get 5, 6, 7 killer people together, yeah, they'll figure it out. And you wouldn't put this in a blog in TechCrunch or something like that, but if you're really, really, really honest, it's finding the 10x teams, and you can kind of figure out the markets later. And so that's not like a very tweetable line, but I think it's the truth.
I completely agree with that. We don't necessarily have a sort of theme-driven fund. We are most times reacting to what entrepreneurs are telling us, and we go with sort of the themes that are there at the moment. So what we look for, again, is really technical teams. More recently, one investment that we made is in a company called Osaro, which is built around reinforcement learning. We also recently, or not recently, but about a year and a half ago, invested in a company called Nirvana, which was most recently bought by Intel. And again, this was back in 2014 when deep learning was just starting to pick up, yet we found this incredibly technical team that had the foresight that hardware acceleration is going to help this field that's going to massively grow and develop. So yeah.
Okay, great. So we started talking about this a little bit. So, AI is obviously the theme of the day, of the year, the hot topic of the moment. How do you guys think about this in terms of trend? Is this now for real versus the prior incarnation of AI? Can we build businesses successfully? Will the next billion-dollar company be an AI company?
I think it's unquestionably real. We have a portfolio company in the med tech space where my dad was a pathologist, and when I was a kid, it would take him 20 minutes to analyze a case to determine whether or not you had cancer. I think in a minute, these guys can analyze 500,000 cases at 10% better accuracy than my dad could after 10 years as a resident and 20 years as a doctor. Now, the FDA doesn't approve stuff like this, so you have to find different use cases for it. But from a capability perspective, I remember when we were investing in the company 2.5 years ago, people were kind of doing eye rolls like, yeah, like a machine is going to diagnose whether or not you have breast cancer, and now it does. So I think this is one of these things where it's completely overhyped. I agree with you. I mean, the number of .ai pitches that we see are where AI and ML are weaved into the pitch. It reminds me of Green 8 years ago, and cloud or Docker or low power, all sorts of things we saw over the last decade, or obviously big data. But it's driving such giant efficacy in certain areas. I think it's the hype is justified. It's just finding the right mix.
I'm a believer that the best products of today or tomorrow, or the winners of tomorrow will solve problems in a way that where AI would be behind the scenes, where you won't even realize that it's being done by AI. And I think that's where the beauty of things like Slack and everything comes in, because it's much more of a mass market story than just coming in and saying we are an AI first company. I think, so that's one category. Obviously, the other categories are deep down in the infrastructure stack, down in the chip and infrastructure layer where, like the Nirvana folks did. I think there's more opportunities there as well.
I think we're a little loose sometimes on this definition of exactly what AI is. And depending on how we characterize it, it can be more or less overhyped. But some of these advances in mathematics and various forms of machine learning for certain use cases, particularly, Mike alluded to one in computer vision. If you think about staring at these images or helping a car or a drone avoid obstacles, things like deep neural networks, they're unlocking a class of a problem for which we have no current solution in a way that I think is reasonably hard to argue with. The amount of stuff that people want, automated in their daily life, we'll see. And we talked a little bit about the chatbot, and the chatbot has been this really interesting veil because we don't know exactly what's behind some of these bot interfaces. It could be a human, it could be a machine, it could be both. It's a great abstraction layer that lets us, sort of gradually edge our way into more computer-driven interactions.
I think one of the benefits of AI is allowing us to do things at so much more scale as humans, but the other area is how do we do things that are better than humans? And Mike mentioned scanning of medical records or computer vision scans. This is a huge area that I've been focused on or thinking a lot about for the past 6 months, whether it's drug discovery, whether it's finding a hairline fracture in a X-ray better than a human can actually do. And again, all leveraging software and deep learning, but obviously requiring lots of data, a large data set. These are areas where you not only become incrementally better than humans, but the question is how much more better or how much more better, I just said more better, how much better do you get? And when you think about drug discovery, I mean, state of the art today is spending a couple of billion over 10 years to find one drug that might have 20% applicability across a certain disease patient. Now we've invested in companies that are either software only or have a very specific area that they're looking at in the drug discovery process where you can minimize or decrease the capital intensity and shorten the time frame, leading to everything that we're talking around personalized medicine. But that's also an area that's really fascinating.
Great. Okay, and you guys invested in color genomics, right? Among other things, right? Is that right?
Yeah.
Personalized medicine and.
Yeah, color genomics is one of the more, I'd say, consumer-focused companies that we've invested in on the healthcare side. Is very similar to 23andMe, but hyper-focused on certain verticals.
Yeah. But that's massive amounts of data that eventually gets analyzed through machine learning and.
Yeah, exactly. Massive amounts of data, but again, I don't have a medical background, and I'm learning a lot about the healthcare industry from the ground up. It's just there's so much data there that I think AI, deep learning, machine learning can unlock so much potential. Color genomics is looking at a person's DNA to figure out whether or not you have any potential for developing a disease, not whether or not you will develop that disease. And there's so many layers that ultimately determine whether you will or will not. And every layer in itself is this whole new data set. And if you think about, call it 5 or 6 data sets, they're all interlinked, so then you have a massive graph network, right? And the only way you can actually crunch all that data is through big data techniques and ultimately deep learning and other type of machine learning techniques.
So when you think about AI as an investable category, do you guys worry about all the large tech companies? So if you think about it, so in the history of the internet, the first wave of innovation that was, to caricature a little bit, that was very much a little startup that didn't have a lot of money but really got it, versus older incumbent, non-technology driven that was paralyzed by innovators' dilemma, that type of thing. And if you fast forward to today, and now all the little AI startups are essentially competing against Google and Facebook and Uber and Amazon and Salesforce. So does that worry you guys? And especially in the context of you see all those AI startups that get bought almost immediately.
So I can speak to that. So on the pure consumer side, I do believe that if the company does not have a data acquisition strategy, you're toast, and a unique one. We talk about, in the enterprise software side, we talk about customer acquisition costs. Now in the AI world, we talk about data acquisition costs. I think you'll see more of that happening on the consumer side. On the enterprise side, I think there's a lot more to be done there. There's obviously data that's hard to get to. It's in silos, and a lot of entrepreneurs need to find that data and also combine that with domain-specific intelligence. So I think that's the part that's net new, is you have to understand the features in the data to extract, to do something interesting in security or manufacturing or finance or whatever else. And if you don't understand those features in the data, you'll most likely end up predicting the wrong thing. And so we look for entrepreneurs with domain expertise who understand what features work, what features don't, and then obviously the data model behind it and the data extraction and the big data skills. So all of that combined will create value on the enterprise side.
So competing with Google is a terrible idea. We're really in the first time, as you alluded to, in a generation where AI is such an applied science that a lot of the leading technology companies have amassed arguably more of this talent than academia at this point. But look at Google, it open sourced TensorFlow, and we can have a debate about why they did that, and they want people to come on their cloud, of course, but they're sort of saying, hey, we're not going to compete. Yes, we have Jeff Dean, so don't mess with us, but we're not going to compete on the basis of having better data science. We're going to give a lot of that away. We're going to give some of our key sauce away. What we're going to hold back is that data. And so if you're trying to look at that same data set to do the same sort of thing that Google's going to do, I think that's a really hard bet. And so the big question is, what are you going to do with all the data? And that's why business models around AI, I think, are an area that deserve a lot more attention. I don't know how many of you guys how many people watch South Park at all? Have you ever seen a few? Okay, so when they try to explain business,
everyone's lying. Everyone's seen South Park.
Everyone's seen South Park. There's these gnomes, right? And the gnomes that teach you business are
underpants gnomes.
Step 1, collect underpants. Step 2, question mark. Step 3, profit. A lot of these AI companies are step 1, collect data science. Collect data scientists are worth $10 million ahead. Google, Facebook, some other company will buy you, and they're not putting enough thought into how to build a sustainable business model. So you're going to do this one thing marginally better than everyone else. How does that translate to a durable business?
You hire 40 data scientists and have a good exit. That's what Nirvana did. I'm just kidding.
That's very true.
It was 400, right? I think Google's the one that I really spent time worrying about. I literally had a team pitch me 2 weeks ago on an API-driven image classifier, and it was a really good team, but I'm like, I'm sorry, have you seen Google Photos? Explain to me what you're doing. Like, they have such a massive lead over you, and they're a reasonably large company. I think they're really well positioned to beat you senseless very quickly. But the rest of the guys, I mean, Google is the only company that seems to go out and invest in areas that have nothing to do fundamentally with their core business and then do a good job of it. Everybody else actually has this notion of focusing on the thing that they're trying to do. Yeah. And so, Facebook might have great AI talent, but it's not like fluttering around trying to create self-driving cars. They weren't 5 years ago. So I frankly spend more time trying to pull people like that out of their companies than I do worrying about competing with Facebook or something like that. Yeah. But Google's kind of unique. You want to understand what Google's up to. And I will say, if you haven't gotten a briefing from GCP, it's pretty amazing where their heads are at with that. I'd be worried if I was Amazon.
Yeah, and maybe, Jeff, so there's a competition sort of head-on in terms of product, there's a competition in terms of like certain talent, are you guys finding that those great companies just, hire all the top people?
Yeah, I mean, I just had lunch with one of our companies out here. It's also in the AI space. A lot of frustration around the ability to attract talent, not only in the industry, but if you go straight to academia and try to pull them out of, even if it's undergrad, they're getting 7-figure offers from Google, Facebook, to go work on whether it's core deep learning tech, AI, or better ad targeting. I mean, it's the benefits of Google and the frustrations are both there. But it is a real issue, which is why I think when we look at any team, especially in a seed stage company, it really needs to be a strong foundational team. It can't miss a single piece. Typically, the teams that we're looking at today are generally 2 or 3. That's just the nature of how technically challenged these things are, and it is a challenge. Whether you're here in New York or you're out there in San Francisco, but more and more, I'm finding that the teams that we're funding are coming out of academia, because whether they worked on it together at their postdoc as a research effort, they're both missionally driven to solve this issue because they've been thinking about it for the past 4 or 5 years. We've found that is a really interesting area where you find really passionate teams, but elsewhere it is very challenging.
Okay, very good. Actually, want to open to questions if people have any. There's one over there. Oh, where's the mic? Yes, over there. Sorry to make you run. Yes. Ways to go.
Hi. One of these companies with the right mix of buzzwords and the team and whatever. So as a result, access to capital today is actually very easy. But so if I turn the tables a little, and could you tell how you see the role of a VC going forward for companies that do something in this AI and LPML space? How do you guys, how are you going to differentiate yourself and provide some services to companies like ours that really make us successful beyond raising the 10, 20, 30 mil?
At the risk of sounding really elitist.
Too late.
Too late, yeah, I know. People who know me well would accuse me of that regularly. I think access to capital, I would agree, at certain stages is readily available. But as you scale a business, I don't think the access to capital is really that easy to get. Having worked with, I've been in venture a decade. I'm having worked with God knows how many companies. I mean, it's not nearly as freely available as many of my former portfolio company CEOs would have wished. I would also say that access to smart capital, I think, is in pretty short supply. And working with people who know how to scale early stage companies, I mean, I can count on a small number of appendages, how many people really know how to do that well. And so I think it's pretty easy to tell who knows how to do this and who knows how to help and who doesn't. I'm not going to give an advertisement for us, but I think there's some very clear things when you talk to people.
Yeah.
Anybody else?
No, we just I think there's VCs who actually sort of help build companies from the beginnings. I think if you just go, there's two kinds of VCs: the stock pickers and the company builders. And you can go get money from the stock pickers who will wait for numbers and data and invest in you. And if you want a company building kind of VC, and I believe all of us here are, we can do that many investments. We do 2 to 3 a year, maybe 2 a year, maybe something like that. So getting our time, getting our effort, once we sign up with you, we are behind you, we're working for you, we're helping you find the first 20 customers, we're helping you find product market fit, defined as an average salesperson being able to send to an average customer without your involvement. We're helping you find the best engineers, not just find, but actually close them. Helping you find the salespeople at the individual contributor level, not just at the management level. I think all that takes a lot of work, and a good VC who's worth their salt should be able to help you get there.
I think if you find yourself in a fortunate situation where you have VCs wanting to give you money and throwing money at your feet, one suggestion I have is talk to their portfolio companies. It shouldn't be that hard for them to do, and you can get a flavor of how their interaction is, whether or not it fits with the type of person you are, where you find holes in your ability to execute, can they complement that? So that's a pretty easy thing to do.
Very cool. Do we have another question over there? Lady over there?
Hi. You spoke a little bit, or actually you spoke considerably about healthcare, and with data acquisition being such an essential part of that, are you all concerned about the strict HIPAA laws, and have you adjusted your projections for the companies that you're working with, in particular your exit plans or revenue generation?
I think the healthcare space is one of the simultaneously most interesting and most terrifying verticals to spend time in. And I think regulatory reasons are a big part of that. I mean, for one of our companies, one of the things they did was they looked internationally first, which is not a typical strategy for us, but it was finding data partners who had access to kind of what Jake was talking about, right? Kind of this unfair access to data early on. And I think the United States is going to be at a material disadvantage on the healthcare side for this reason, where I think as a patient and as a son or a father, I appreciate the HIPAA laws, and I think they have all these good intentions, but in terms of creating training data for deep learning systems, they're terrible, right? I mean, you look at, I can't tell how many companies we've seen that just try to basically unlock value from EMR, right? Where it's not so much of a technically challenging problem as is how do you get around all the regulatory hurdles. So I think it's a real issue, and it's something we think about. I think it has to be a step zero question when you're thinking about a business here.
Great. So maybe one final thought. We're actually running out of time. Anybody have another answer to the question, or anything that they want to share? All good? Okay. All right. So you guys are going to be around upstairs so that people can chat as much as they want. Wonderful. So thank you very much for being here. I really appreciate it.
And thank you, Matt.